Scotland has experienced volatile economic growth recently. Surveys indicate a flat economy at the turn of the year. Despite this flat economy, the construction sector appears to be constrained by labour and material supplies, and there are concerns over the ability to cope with any significant upturn. Growth forecasts of 1.3 to 1.4% would show more stability and improvement, but would still sit below long-run performance. Scotland's planning system is clearly becoming more efficient, with processing times improving, according to latest statistics. Whether this leads to more effective planning outcomes over the long term remains to be seen. The new Planning Scotland Act provides for local development plan reviews, which is appropriate as some of those are beginning to age prematurely. National housing output has reached its highest level since the global financial crisis of 2008. The market for well-located sites is very strong, although it is still dominated by PLC builders and some regional players. Sales did slow in late 2019, but we have seen a strong start to 2020. The build-to-rent residential sector is now gathering momentum in Scotland, and we see that accelerating over the coming years. The existing and consented pipeline is 4,300 units, and the market focus is very much on Edinburgh and Glasgow city centres. The outlook is also for continuing strong demand for housing land and, in the student housing sector, a more selective development market. For the first time in 5 years, take-up has slowed and supply increased in the Edinburgh office market, with take-up reaching 629,000 square feet. With the lack of recent speculative development, we've seen upward pressure on rents, and new buildings are beginning to come forwards, and opportunities for refurbishment. Market demand for Glasgow city centre office space remains very positive, with 862,000 square feet taken up, and supply beginning to fall. With this reduced prime office supply, we are expecting further rental growth. The new development pipeline is coming forward and should bring with it some significant pre-lets. In the East Central Scotland industrial market, 2019 was more challenging, as occupiers became increasingly risk-averse. The underlying market, though, is resilient, underpinned by a record low vacancy rate. There are prospects of rental growth, but refurbishment of buildings may be required. The Glasgow and West of Scotland industrial market has a record low vacancy rate, and this will tighten still further. The market's been driven by discount grocers and online retail fulfilment, among other sectors. Supply is now so low that this is constraining business expansion. And the market urgently requires more new industrial space and sites. The continued growth of online retail sales and the drive towards destination centres is reducing the requirement for physical stores. Repurposing of town centres is becoming more commonplace, and this should be helped by the adjustment in values over 2020. The commercial property investment market in Scotland again delivered 150 deals in 2019. Investor sentiment is shifting towards the alternative sectors such as build-to-rent and hotels, attracted by long leases and investment at scale. Alternative investments are set to grow, but for the moment remain 10 to 15% of the market. The Aberdeen property market is in recovery mode around a more stable oil price, planned investment in the subsea sector, and corporate activity driving occupational needs. Take-up in the Aberdeen office market rose to above 500,000 square feet for the first time in 5 years. A continuation of this stable office demand and falling supply is putting the office market back on an even keel. Demand for industrial property in Aberdeen accelerated during 2019, with smaller transactions dominating the market. This rising demand, faced with limited modern supply, is encouraging developers to press ahead with new schemes. Rising economic growth and improved political stability are encouraging a more positive property market. The sectors to watch for 2020 are the emerging build-to-rent market, the prime Glasgow and Edinburgh office and industrial markets, and Aberdeen, which is now clearly in recovery.